Our guest today is Saif Ahmed, Managing Partner at Infinity Consultants, a Sharia compliant advisory firm based in Bangalore, India, that provides corporate finance and business advisory to clients in the Gulf region. Infinity Consultants are Ethica's exclusive partners in India for distribution of Islamic finance training and certification services. Saif also heads Zamzam Capital and Zaid Chit Funds, which is India's first registered Sharia compliant chit fund. Saif began his career as an investment banker at Merrill Lynch and JP Morgan, advising on IPOs, secondary offerings, mergers and acquisition mandates in excess of $100 million. He also worked in the venture capital industry for a subsidiary of Mizuho Securities in Seattle, and later worked as an Islamic banker for 5 years with two of the largest Islamic investment groups in Kuwait. Saif graduated from Bates College, USA, with a double major in economics and mathematics, and later studied at the London School of Economics. Welcome, Saif.
Good afternoon, Samir. Thank you for the kind introduction, and good day to everybody who's attending. Uh, Thank you from my end as well for taking your time, your valuable, precious time out to attend this webinar, uh, whose topic is Achieving Financial Inclusion for Muslims in India and How Can Islamic Finance Help? So without much ado, I'd like to just jump into this presentation and get started. The contents of the presentation will be a little definition of what is financial inclusion, what do we actually mean by financial inclusion, how much of financial inclusion has India achieved, what is the present financial status of Indian Muslims, purely from a financial angle, and really how could Islamic finance help India, help Indian Muslims, and help India as a result. And we're also going to talk a little bit about Islamic finance in other Muslim minority countries to see how Islamic finance has helped achieve financial inclusion in those countries. And we're going to talk a little bit about demand for Islamic finance in India, the present status of Islamic finance in India, and what is a plausible road ahead, what the road ahead should look like, and end up with some ways to actually implement with some ideas and a case study. And we'll have a Q&A session to wrap it up. So I like to say that though the topic is very specific in nature, I hope that the attendees would have a lot of takeaways from this and not just come up with actual facts in terms of what is the present status in India in terms of financial inclusion and Islamic finance, but how these two are related and how a positive road ahead could be structured by marrying Islamic finance with financial inclusion, relating to India, but definitely applicable to all countries in the world where you have Muslim minorities, majorities, and really Islamic finance, as we shall see, is applicable to all and is well received by all communities. So we'll jump in with what is financial inclusion. This is a definition of financial inclusion by the Deputy Governor, Mr. K.C. Chakrabarti of RBI, which is the Reserve Bank of India, India's central bank. And he states that financial inclusion is the process of ensuring access to appropriate financial products and services needed by vulnerable groups. And that is what it is. Basically, the downtrodden, the low-income groups getting access to financial at a fair cost in a transparent manner. It's a fundamental right to get to receive financial services, given that banking and financial services are public good. And there's a direct correlation, as various studies have shown, between financial exclusion and poverty. So if you're excluded from the system, the chances of being below the poverty line are much higher. And when you're talking about financial services, we're talking about the entire spectrum of services, not just banking, but we're talking about savings, insurance, credit, which is what we normally mean, and even payment services, remittances. So we're including the entire gamut of services. So this is a topic that is not just a big thing in India, in the public policy in various debates, but is something that may is a topic of interest for many central banks, especially among the developing world, and has grown in importance since the early 2000s, early part of this millennium. And how is financial inclusion doing in India? So some statistics to set the record here. India, as we know, is doing very well from the growth perspective. There's an India story, but it still remains the fact that a third of the world's poor are in India. Uh, Almost 70% of Indians live on less than US dollars two a day, as per World Bank. Uh, just 34% people have access to formal banking services. Almost 500,000 out of 600,000 villages have no banks. 80% of Indians do not have insurance. 40% of the working population have no savings. So there is a huge part of the population that is excluded from the financial system, and there are huge disparities that exist in India, as you have in many developing countries in the world. So a famous comment from Mr. Bimal Jalan, who was a former governor of the RBI, is that the top 20 rich Indians earn as much as 300 million people out of roughly a billion plus population in the country. So for India to facilitate more balanced economic development, it's fundamental that universal financial services is provided to the rest of the population that is financially excluded at this time. And what are some of the policies that policymakers have implemented? Uh, the biggest policy driver in this aspect of financial inclusion has been opening banking accounts uh, to as many people, for as many people as can possibly be. We still had, for all the efforts, we've got about 100 million accounts open for a billion plus population in this drive. Less than 20% is used. So these are no frills accounts. This is a big complaint that is heard, that many of these accounts are open, but they're hardly being used. They're just there on paper. There's a policy to open a bank in a branch in every village with at least 5,000 people by the end of this year. Uh, Banking correspondents are not banks, but they are organizations that are used, affiliated with banks, to provide banking services in smaller villages, so that the cost of providing banking services can go down. A lot of innovations are taking place. Rural credit cards, micro insurance, micro pension products have been developed and are being pushed through to get people into the system. There's a strong emphasis on technology, rightly so. Technology is a big leveler, and by using tools such as biometrics, smart cards, mobile ATMs, and etc. Uh, the government and policymakers and the banks are able to get banking financial services to the rural hinterlands of the country. SHG stands for self-help groups, and they are linked with banks. So this is related to microfinance movement in India, where there's a huge reliance on SHG, the SHG model, where primarily women come together as groups, form groups themselves, get themselves registered with banks, and get funding that way. So this bank linkage model is also being used to push financial inclusion by creating various livelihood type initiatives, which is a fairly recent venture. The emphasis now is to promote livelihood financing, so that it's just not linked to pure credit disbursement, but actually runs through the whole value chain, whereas credit can be utilized for actually generating income and being used for productive purposes. Rural development and self-employment training institutes are of way are is an initiative where banks actually sponsor training institutions uh, through part of their CSR, corporate social responsibility activities, and these institutes train unemployed youth uh, in various skills so that they get self-employed, get employed. They take care of their training expenses and living accommodation expenses. So, how do Indian Muslims fare in the whole picture? Uh, So let's talk about how many Muslims are there in India today. We're talking about roughly 180 million people. Population globally, around 11% of global Muslims live in India. It's the largest minority group among in the country. Roughly 75% of all minorities are Muslims. Sachar Committee report published in 2006 was a landmark report that was for the first time, a study was done analyzing the performance of Muslims on various indicators, including financial inclusion, in other areas such as education, employment, uh, and other social metrics were analyzed empirically. It was a landmark report, and some of the interesting observations from that report we're going to talk about later. But at this point, I'd like to state that in terms of financial inclusion, the Muslim community was actually behind even the scheduled caste, scheduled tribe, SC/ST community, which is actually considered to be the most backward grouping in the country. So this was quite a startling fact that came out of this report. Muslims have a heavy reliance on self-employment. That's just the nature of the way things are. So this is an important point to know. So getting access to credit is even more important in this case because of the emphasis on self-employment. It is a fact that Muslim-dominated areas are not adequately serviced by banks. They fall into what is known as the red zones that are negative or that are on the negative list of banks. And another very important fact related to financial inclusion is that Muslims, though part of the India story, benefiting from the growth that India has seen, especially in the last 15 years, 10, 15 years, is they are largely absent from the top of the pack in the list in terms of wealth creators. And we look at Business Times 500 list, for instance, companies that are actually promoted or owned by Muslims. So this is also an important fact to consider. The 12 5-year plan, India has 5-year plans for development that are devised by the Planning Commission of India. So the 12 5-year plan that begins from 2012 to 2017 has in its motto faster, sustainable, and more inclusive growth. So financial inclusion is definitely high on the list of the government and policymakers in the country. So Muslims, what do they need? They need a specific approach to get them financially included because, as we see, the numbers are not too good. And the point we're making in this presentation is that Islamic finance is the way to get them to be included in the financial system. So as I mentioned about the Satire Committee, we'll just talk a little bit about the findings of that report, particularly relating to Chapter 6, which talks about access to credit for the Muslim community. And one particular table that I think really sums it up is that Muslims have a very low share in the amount of credit outstanding in the country, which is roughly around 4.7%. And other minorities who are 25% of overall minorities have a higher share than Muslims at 6.5%. So this is a very low share compared to the share of population. And on average, the amount of credit outstanding per account for Muslims is about half that of other minorities, and one-third that of others. So we're talking about very very low credit access to credit numbers here for the Muslim community. And talk about one particular instance in West Bengal, where Muslims are roughly 30% of the population. You have around 29% of the accounts held by Muslims, but the amount of credit that they have access to is an abysmal 9.2%. So just to bring the point across. There are institutions such as NABARD and SIDBI that are governmental organizations. NABARD stands for National Bank for Agricultural and Rural Development. SIDBI stands for Small Industries Development Bank of India. The numbers from them also are very, very low. Just 4 and 0.5% of credit actually flows to Muslims in these institutions.